Hello, everyone. Welcome to this week's episode of Snakes and Ladders. Now, firstly, does everyone like my sort of light reference to Chamath's collar today?
Oh, that's what we're doing here. It's good. Oh my God, is that Lori Piana?
I don't know whether anyone had seen it, but there's been a very funny thread on X about for every like that post got, they made Chamath's ridiculous jumper collar get bigger, and he turned into a sort of a Tudor type character. So I thought I didn't have any of those jumpers available, but I thought I'd do my best impression of sort of trying to.
You don't have a few $4,000 jumpers lying around to just smoke out in.
You know what? Like I've always said, cheap clothes, expensive accessories. You can have the exact same jumper
You were going to throw it in
quid from Zara. So,
and it gives you the chance to buy them more often because they're slightly dodgy quality.
Well, it's slightly dodgy quality, but also my fluctuating weight allows, you have
ever thinner, vanishing in front of our eyes.
Lush. Well, what a lovely way to start the podcast. How's everyone's week been?
It's good. I'm actually feeling a little bit old this morning because I played tennis last night and I had to keep serving to a point where my back hurts.
Oh, wow.
So that's a depressing moment, isn't it?
Aren't you the youngest? Who's the oldest out of you two?
Yeah, I am the youngest.
Wow. Okay.
Yeah.
Hard living. That's called hard living, ladies and gentlemen. Hard living Patrick Lambert, or Charlie Lambert as we now call him. Jimmy, how's your week been, buddy? It's been a big week for you, huh?
Very good. No, been busy. Lots of meetings, lots of calls, lots of nice messages from people. I mean, that's the overwhelming thing, is how many nice responses and messages, and everyone.
God, you're such a likable man, Jimmy.
For our audience who might not know, Jimmy has started a new venture with us called Corpcast. So we are bringing the world of marketing into investor relations, and Monday was our launch, and it's been a very solid week for us. But we won't go into that. We want to talk about the markets overall. And the markets maybe haven't had quite as much of a success as we have had commercially this week. Jimmy, you want to give us sort of your outlook on general outlook of the markets this week?
So this week we've seen global stock markets sell off, with many of the AI and big tech names being the most impacted. It's kind of rippled out globally. So we've seen Japan, which has been at all-time highs, come off a little bit. What sparked it? Could it have been Michael Burry of Big Short fame, sticking $1 billion bet against Palantir and NVIDIA?
He's really made Ben's week.
Well, hang on. Let's just go straight into this now. Michael Burry is obviously a legendary investment manager or investor, but he hasn't always been right.
He's a one-hit wonder, isn't he, Ben? And he's going to be wrong now.
He was very heavy Alibaba, and from my very detailed reading, he sold most of his Baba stock before they lifted off this year because of their cloud compute and their AI, right? So, he's not always right.
He was wrong on the housing market for 2 years. So he lost a lot of money for 2 years before he actually made any money.
Wrong, was he? He was early.
Well, look, I think that's the story that people don't know. Is actually a few people did short the housing market, right? He was just in there long enough to actually turn a profit from it, correct?
Yeah, I think that's what he stayed liquid while everyone else sort of got crushed, I think is the answer, yes.
So basically what we're saying on Snakes and Ladders is we're bearish on Burry.
No. I think what we're saying is Ben thinks he's a snake. We think he might be a ladder. I like that conclusion.
I'm hodling for the
time. He got his call wrong with Alibaba, so he's clearly a moron, and his Palantir is going to the moon.
But can I just ask the question that's probably the obvious question is, generally, do we now think that this is maybe the bubble starting to deflate a bit on AI? Because he has obviously picked out Palantir as one of the bearish bets. Could this actually spark what we've all been expecting, which is a slight retrenchment in the markets?
Yeah, I mean, everyone else's crystal ball is as good as mine. Yeah. I don't think you can say that, because every time everyone's always said, "Oh yeah, tech's overheated," it's then ripped straight up another X numbers of percentage points. So you do wonder if perhaps now, as you come to the end of the year, with people taking some tax positions, are they going to take profits? I think that's possible, but equally you see,
doesn't it?
But equally in crypto, crypto for the first time, goodness me, since May of this year, it dipped down below $100,000 a coin.
I was interested it didn't plummet from there. I'm reassured by that. I was nervous that once it broke 100. But can I make because like Jimmy says, I'm not sure we've remotely got the crystal ball, but I would say anecdotally, and this goes to a little bit of what we were talking about last week, the market is an evolving place. I mean, but this is a big inspiration behind Courtcast, and so much more of the market is represented by retail, etc. That I do think an event like a Michael Burry shorts it will be the type of thing that does trigger a retrenchment,
Yeah.
because as opposed to the fundamentals collapse, it's going to be a something sensational. You know, that is ultimately what turns the people, the
These
mass,
days,
that
yeah, that's why owning sort of media channels and owning the narrative is so much more important these days, right?
So I just think I'm not, but couldn't possibly comment on whether this will do it. Certainly, it's raised the question, and we've all seen it coming out this week. But I did kind of come away from it going, it probably is a moment like that, like an individual, like an Elon or somebody says something and everybody panics as a result, rather than a sort of more calculated.
It's interesting actually. So I was thinking about this morning. It's that the sort of the profile that CEOs or investors now have, right? They are rock stars, and actually, I was thinking, well, Michael Burry. I think we all have a sense of what his personality is like, having seen the film and read a little bit more about him. Would Michael Burry be sitting there making these puts or these shorts against NVIDIA and Palantir thinking I'm going to change the market? Probably not. He probably just does it and actually has this huge, but Elon's been
Better
doing
not
it
be, because otherwise he would be market manipulating
well, no,
them.
but Elon does it all the time, right? Elon does it all the time. And, he skirts that line, certainly in crypto. I mean, he doesn't even need to skirt a line there. But, Elon very much knows that one tweet from him absolutely moves markets, right? And, now you're sort of getting people I don't think do it on purpose, like Burry, who are actually moving market. That was just, Jimmy, he basically just put it in a filing, right? People just uncovered it. He didn't sort of put that out to the public other than a mysterious
No, but
tweet.
I think, and I could be wrong, he published his filing quite early. So there's a deadline that you have to in the States put your 13F out by. And I think he published it 2 weeks early, because if you look at the timing of the filing, he's actually lost money on most of his position, on those two positions in particular. But now he might be in the money on them, depending on where his shorts sit. But he definitely published it early, and you wonder if that's because he was losing money. But we'll
This
see.
could lead into the fact that the other piece that I noticed wasn't in our general market update, but I'd love to just tack on the end, was that Elon got his package voted through. Do we think he'll actually get paid it if he achieves it this time?
No.
You don't think he will?
I don't think so.
Come on, he's made so much more fuss to get it voted through this time. They can't deny it twice, surely. I mean, firstly, if he achieves it, me. But
yeah, but I mean, the metrics he has to do to achieve it are wild, aren't they?
Let's just assume he does. I mean, that's what you'd have said last time. Let's just say, because the metrics looked totally unrealistic last time, and he did. If he does achieve it, will he get rebuffed twice? That would be nuts, wouldn't it?
Yeah,
anyway, sorry, Jimmy. Go on. We'll let you finish your market round off.
No. So turning to
away.
the UK, Rachel Reeves went against tradition and gave a speech ahead of the budget, no doubt to kind of set the scene for what we're all in store for. It looks like, although not confirmed yet, she's going to break one of her manifesto pledges, income tax,
which is very much in the tradition, I would say.
Yeah, I mean, there's a big old black hole there that's got to be filled somehow, so someone's going to pay for it. But on the plus side, if you're invested in British government bonds or gilts, you'll have made a bit of money this week, as they all rallied at the idea that this is actually quite sensible tax planning. And in terms of UK company news, BP reported better than expected Q3 numbers. Associated British Foods announced a strategic review of its corporate structure, possibly looking to spin Primark off out of its, so it can just focus on its food business. M&S announcing a £136 million hit to annual profits due to the cyber incident that it experienced earlier in the year.
Insane, isn't it? Wait for JLR's release. Where are they going to be?
Magnitude higher. I mean, I think they're already talking about it being £1 billion hit for JLR. I mean, it's really, really scary.
Interesting there, because I suppose the supply chain ripple was so much more significant for JLR, right? Because in theory, you could imagine they were similar a tap, but M&S is able to recover that much faster with daily deliveries of food, etc., etc. It's just a faster moving thing.
And the other thing with JLR that I didn't know is there's actually quite a few companies that their entire business model is making parts for Jaguar Land Rover. They don't make parts.
Yeah, and if they go under, that's it. They can't resuscitate. Yeah. So that was it. That's my point. I think the ability to resuscitate your supply chain quite quickly after the fall for M&S. It is just that much. Anyway, so I just thought it was interesting. Yeah.
And finally, Guinness and Johnny Walker owner Diageo lowering its forecast for sales and profit growth, sending the shares down a bit this week. So lots going on. I mean, it's busy sort of results season in London.
Have you been watching that show, Guinness, on Netflix? Anybody been?
No,
I watched the
haven't
first
yet,
episode of it, maybe even the second episode. It's better than I expected.
Oh, interesting. It was worse than I expected. It shows you what I know.
It's not my sort of thing, unless it's like Dark Tree. Unless it's basically True Detective season 1, I don't want to watch it.
Shock.
Yeah, okay.
Just before we go on to our big topic of the week, can we just go into those Diageos? Did they give a reason as to why they are peeling back their projections a little bit?
I think they did give a reason, but I haven't written it down in the notes. The reason is, I think, broadly speaking, a huge amount of their growth comes from, I want to say, China and Latin America, and I think the growth is slowing in those regions. But I could be wrong.
Okay, no, I just
But
curious.
they've had a really tricky couple of years, as they had a rock star CEO, and I'm going to mispronounce his last name, but it was Ivan Menzies. And he basically grew the whole thing through acquisitions, and it was a real darling of the market. And he announced his retirement, and during the transition process, he very sadly passed away. But also, all of a sudden, a new CEO was thrown in, and then it's never quite recovered from then. I think they're down a lot, like 30-40% share price wise since he passed away.
Being that this is such a dynamic podcast, I can tell you that it was because of US demand, actually, and China.
US demand.
Yeah. So US demand was more flat rather than dropping, and China not doing what they were hoping for as they're trying to expand over there, I think, as part of it. But yeah.
I suppose it's just I have an interest from a generational point of view, drinking, the sort of the culture of drinking, and how that is affecting companies like Diageo, I suppose. But it would feel it's more of a sort of an immediate issue, I suppose.
Well, they've been lucky because that whole splitting the G craze has meant that among young people, I think Guinness is still pretty well. Yeah, I think Guinness is still pretty well drunk. Whereas I think if you're
give credit to that guy, I want to get him on the pod. That is incredible to me, the Scooter Scorer thing. Like, I just think the sort of wild viral success of necking a pint. Just got to give credit where it's due.
There's wilder ones than that. I've been watching videos. So I've been on Instagram watching a guy who's literally just he's like a builder. He's like a bricklayer, French guy who just basically goes onto the side of the road next to his van, breaks apart a baguette and just literally breaks apart like onions and just shoves it in his baguette, puts salt on it and eats it. And I'm obsessed with these videos. I've got to send them to you. Obsessed. There's so much like multi-layered messaging in there. All he does
we launched a new company this week, and you're telling me you're
watching people stuff onions into baguettes.
It's incredible. Anyway, move on. So this
week,
we want to talk a little bit about something that's very close to my heart, I assume everybody's heart, and that is the ISA. Jimmy, over to you to sort of lay the groundwork.
What's the number this week, Jimmy?
Thank you for asking. The numbers this week is 22.3 million, and that is the rough number. Yeah, exactly. Real zinger. The rough number of UK adults that have an ISA. And for those that don't know, and apologies for those that do, the ISA is the individual savings account. There are quite a few different ISAs, the main ones being the cash, stocks and shares and lifetime ISA. And every year, UK citizens are allowed to allocate, I believe it's circa £20,000 into these products of their choosing. They can split it how they want. And it's a bit of a tax wrapper so that any investments that you put in there are exempt from income tax and capital gains tax. Incidentally, the first ISA millionaire was Lord John Lee, unfortunately spelt differently to me, so I can't bank on that inheritance. But apart from that, it's all right. But the part of the reason why this is very topical is because ISAs, there's a lot of conversations about should the ISA product be sort of slightly changed in terms of should you be putting more money into stocks and shares ISAs versus cash. The government's potentially looking to limit the amount of cash you can put in there because they want to put more money into the stocks and shares one. So it's a big discussion at the moment.
Yeah, we touched this a little with the retail access platforms, but there is a wider movement, right? Would be fair to say at sort of government level to consider how to carefully motivate the general UK public into more of the stock market piece. And I'm a big advocate of this. Ben's immediate response is, can we get access to the US market? And I'm going, well, build it and they will come kind of philosophy. We know that the market is the transaction markets, although I know we had an update on recent IPO success, generally pretty flat in London. And I would argue one of the ways to solve that is to have people motivated to spend cash looking for good ideas. And then suddenly good ideas will, of course, come to that market and present themselves. So that I think is wrapped up in this, right? The question with the ISA was stocks and shares ISA. And again, forgive us for those that know, but part of this is for us to want to educate people the things we didn't realize. Why would you go for an ISA? Because the gains that you make in an ISA are not taxed when you take the money out later. So as a really, really simplistic view, a pension, you're not paying tax on the way in, but you will pay tax when you take the money out. And an ISA is kind of the inverse. You've paid tax on the money before you can put it into an ISA, but then if you can get growth from there, you won't be taxed when you take it back out. And therefore, certainly I would suggest amongst our group, the primary ISA we'd all be using is a stocks and shares one, right? We're using it to the gains that we hope we'll see in the stock market over the next 20, 30 years. We won't have to pay tax on those gains when we take the money back out. So it's a great initiative.
It's a fantastic initiative. It's been life-changing for me, I would suggest. Just even the simple sort of stocks and shares ISA has completely changed my financial situation.
Would it be fair to say it was an on-ramp for you? It was for me. It's like, oh, right, okay.
Oh, it was the on-ramp, definitely. It was the vehicle in which I learned about stocks, the stock market, investing, trading, and it's something that I am constantly looking at every day and thinking about. And it's something that I'm, I think why we're having this discussion, because, I was completely clueless before, stocks and shares ISA was introduced to me, right? So actually it's my complete gateway, not only to investing in the market, but financial literacy. So actually I think any government-led program that could be associated or amendments that made to the ISA is actually really powerful. There's so many of these things I just don't touch and don't even think about, but this was core to actually how I live my life now.
So, and therein lies potentially a lovely segue, because that's really powerful to the question at hand about these adjustments. Because on the one hand, I'm giving it the spiel about build it and they will come, and that they're promoting UK access is a great thing. I do genuinely believe it. But on the other hand, if when you had been encouraged to take out your stocks and shares, or you discovered it, right, Ben, but rewinding to that on-ramp, and for me, it was the same thing. It was like, well, the first place you should start saving money is an ISA. Oh, is it? Why? Well, because you won't pay tax. Oh, okay, right. Well, I'll go and investigate those, and you Google it, and it comes up, okay. And that was that first thing. If somebody had then gone, well, this is great, you can invest in stocks and shares, but you can only invest in the UK, I think there's a decent chance you might have moved on. You might have just decided.
Yeah, I think I would have done. So it was the on-ramp was the vehicle of understanding what an ISA is, but also I think maybe like a lot of people got into it in 2020 when the sort of the news around certainly US shares and sort of I suppose the narrative and the sort of
what percentage of your ISA is invested in GameStop, Ben? Just admit it now.
I've never done it. I've never done it. Thank you very much. My wife definitely went hard in on GameStop.
He just went into meme coins instead.
I went into meme coins, but Palantir actually was one of my first things, which was one of the first versions of a meme stock, right? So, and I had a few. I had Riot. I've still got Riot. I'll be honest. Bitcoin mining company. I definitely went in all guns blazing, full meme stocks. And also my diversification at the time was then to get BP. So a load of meme stocks and then a couple of oil and gas. Over the 5 years since then, I've obviously developed and matured a little bit more.
What a sound investment plan. And for anyone watching right now, that is the kind of financial advice you can't find anywhere else.
I know my role on this podcast. I'm the common man. So
I hope you're not. You represent the minority of lunatics out there. That's great.
I think it's very important. But would have been British stocks? I know. You know what? I don't think it would have been. I think the real thing for me was this seems like a very easy gateway to understanding what stocks and shares are. And I would say the other thing as well, and this is something we talk about all the time, is how easy it was. I had an app. It's downloading an app. It's and having the power, the control to pick what I wanted. Right, that wasn't available 20 years ago.
No, to do it very cheaply,
No.
nigh on free, depending on the platform. Free trade, for example, clues in the name. Yeah, there are all sorts. Even if you're doing it through a wealth manager, it's not expensive. If you set up dollar cost averaging, I'm pretty sure all of them waive fees, don't they? Is that Hargreaves definitely do, don't they? I think CS do. If you're going to do set up direct debits and just do a purchase a month, a load of them will allow that transaction limit, so for free. Yeah, I guess the other side of this, and I'd be really curious, Jimmy, in your opinion here, is the cash ISA. And I know you had a bit of data about that, but I'm curious of your thoughts on that, because you see, interestingly for me, it's a bit more of a question as to why you necessarily bother with that.
So I think the important bit to say with the cash ISA is obviously if you just look at it through a simplistic lens, the last inflation print in the UK was 3.8%, and the best cash ISA out there is doing 4.3%. So you are making 0.5% a year on your money. Really, what's the point? The pushback on that is people who are nearing retirement age, or they're saving for a house, or there's some financial event that's coming up, and what they don't want is they don't want a 20% drawdown that then impacts their retirement or their house purchase. They would rather have the low risk option of investing in a cash ISA rather than sticking it in
Yeah, but
stocks,
20%
which
is
is a
only on the
totally
gain,
fair.
right? Which at 0.5%. Anyway, look, you're right. There's a space
No, as
fee.
in you, no, of course, but I mean, as in, if the FTSE 100 drops 20% and you're totally exposed to the FTSE 100 and it impacts your retirement plans or your house deposit, then people would rather have their money in a cash ISA, which is a very specific subset of people. But I think for the 95% of people out there, it has been statistically proven that over the long run, equities deliver a far better return than cash ever will. So on the investor side, you're better off being in cash. But as we've just talked about, Rachel Reeves is all about growth and wants to drive people to invest in the UK economy and have a strong UK domestic stock market. So having £440 billion roughly sitting in cash ISAs across the country, not doing anything productive, her view is that would be far more productive if it was invested into UK businesses. And we know all the reasons, a well-functioning capital markets increases living standards, GDP, job creation. We all know the drill. So is there a way that we can say to people, you can only put X into your cash ISA, but you can put the remainder. So I don't know, there's definitely going to be, and there was a Financial Times article on it yesterday, but making it so that the majority of your money needs to go into the stocks and shares ISA. Will she do it? I don't know. There are pitfalls to it. But having said that, I do understand the premise of wanting more people to invest in the UK stock market. The Office of National Statistics did an amazing graph. It is a little bit dated, but the last one they did was 2022, and the UK share ownership by overseas investors stands at 57.7%, while ownership by UK residents sits at 10.8%. And
Basically,
you
they
compare
back our
that to the
market better than we
US, where
do.
roughly one third. Yeah. And in the States, it's about 34% of adults are invested in the US stock market. So we're behind Finland, Sweden, Germany, Spain, you
That's
name it.
wild.
There's
We
something
have
sort of
the
deeply
lowest share
British about
ownership
that to
of
me.
citizens.
Fucking bunch of
Yeah.
pessimists.
Well,
Oh,
like
yeah, well, it's not
cash
better
under the
than...
mattress, and yeah.
Yeah. Or don't buy British stocks, they'll be shit.
Of course, a British person is a northern accent. Of course.
Well, my family are, so I just default. What about the now closed Help to Buy ISA scheme? Some sort of bonus thing to flip this on its head. I think what clearly my position is that I sort of agree with the idea that we should promote UK stocks. I think generally speaking, look at price earnings ratios; they're pretty cheap, and that's not to say that they will continue rocketing up. But hey, they certainly could do. But instead of restricting, potentially a bonus type situation would be the better motivator. It doesn't need to be huge, does it? But it would motivate people into looking a little bit harder at it. Just what your thoughts are there?
Yeah, I mean, I think with all these things, it's carrot and stick. Inevitably, the carrot is the way to go, as people don't really like being told what to do generally. Certainly, none of the people on this podcast like to be told what to do. But I think it's a very difficult one What's optimal? I don't know. The person who's very good on all of this is a chap called Charles Hall, who's the head of research at Peel Hunt. And if you're on LinkedIn, he does lots of posts on it. He also tends to be the commentator who journalists at the big UK newspapers quote. But it's very clear that if the ambition is simply to get people to invest more in the UK stock market, just give them a method of doing it, and also try and make it so that it's tax efficient for them. That's really what the push is for.
Oh, very good.
We have rambled on today. I didn't want to stop the flow. I think ultimately, if I was to wrap that up, the premise is there that we all feel, and it's something we're hearing all the time, is that the British markets could use a little bit of a boost. I'm glad that we've got a chancellor who is at least thinking about it right now, and sort of what the solution is. I don't know. I want to try and wrap this up. Any final thoughts before we leave our dedicated audience to start their long weekends?
I would say we're very clear on here regularly that this is not a space for financial advice, but I'm going to break that rule here and say if you have not already, go and look at a stocks and shares ISA. And you don't have to buy UK stocks so that you buy anything you like, but it is the fundamental best on-ramp. Ben and I both said it here. It was the way into this market. It's a lot easier to set up than you're probably thinking. And if anybody wants help with how, or platforms or providers, just drop us a line. We will send you how we've done it with pleasure.
And it's super fun. It's actually super fun.
Really interesting.
Especially when you bowl into it by stock picking straight off the bat in 2020.
Say don't do that. Yeah.
Full transparency. At one point, I was 60% down on my ISA. I'm now 30% up. That's what can happen in 5 years. So.
That's what time in the market does versus timing the market.
All right, guys. Well, thank you so much for your time. Lots of love to our audience, and we'll see you next week for another episode of Snakes and Ladders.
Ciao, ciao.